Good evening, everyone.
वेट लोग और आ रहे थे अंदर. तू बार बार स्क्रीन क्यों चेंज कर देता है यार वैभव?
अरे उन्होंने रिकॉर्डिंग स्टार्ट कर दिया है.
चलो करो.
Okay. So once again, good evening, everyone. Myself, Shweta Jain, Secretary WIRC. Welcome you all on the program on professional opportunities in corporate tax. And for this, we have with us CA Manoj Agarwal ji, who is going to talk on the subject. Also, I recognize the presence of our WRC Chairman, CA Murtaza Kachwala sir, CA Saurabh Ajmera, Regional Council Member. Before moving further, I request everyone to please put your hand on your heart for the ICI motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः सर्वे तदूनात्यपि कश्चन एतद्वैता
Thank you. Friends, a year back, when we took charge in the month of Feb, as an office bearer, we all four, a lot of ideas and a lot of things were in our mind, that a lot of things we have to do this, we'll do that. And when we look back today, it gives us a great sense of satisfaction. So thank you so much, all of you, for supporting us in achieving our goal. But under whose leadership we all work, I would like to request him to please address to the participants. Chairman sir, over to you.
Thank you, Shweta. Good evening to everyone. Let me first thank CA Manoj Agarwal. Manoj bhai, thank you very much for accepting our invitation and joining us today as a speaker to share your knowledge. And I'm sure lots and lots of people are going to benefit by listening to you in the next 1.5 to 2 hours. So thank you. Let me also recognize presence and thanks Secretary Shweta Jain. I have Treasurer Piyush Chandak with me and Regional Council Member Saurabh Ajmera. I welcome all the members and I thank you for such a huge response to this program. And believe me, the opportunities are tremendous. And when the VAT came in place in the UAE and in the other countries in Middle East like Saudi and others, so opportunities came up and a lot of chartered accountants from India went there, settled, started practice, and many got jobs also. Because see, traditionally, as Indians, during from articleship also, we learned direct tax, indirect tax, whether in whatever format, VAT or GST, and so many regulations. But the overall Middle East, there was no taxation. This was all new for them. And there are not so many people who have knowledge about the taxation there. And hence, we Indians are in the best suited position to go and support them. And I think we saw so many of them going and getting job opportunities and even settling there. Now again in the UAE with the corporate tax, new set of opportunities come up. And so because up till now, what is the profit which has been shown, there was no tax. But now whether the profit is less or more, whether you are booking more expense and showing less profit and paying less tax, so that will come into play. There also, like we deal between one state to another state, I think there is a lot of transactions between multiple of the GCC countries. And hence, did you sell to a subsidiary in some other company at a low price and you showed less revenue or you incurred more expenses? So again, the related party, the arm's length, the transfer pricing, whatever you call in different forms will come into play. And resultant, whether you're showing the right type of profit and whether you're paying the right type of taxes. And if someone has to really hire a direct tax head and indirect tax head in UAE and pay in dirhams, which means it will be equivalent of maybe two people's cost will be 1.5 to 2 crore rupees, Indian rupees. But if someone decides that I'll outsource the whole accounting function to someone sitting in India, it can become a lot more cost effective because of the cost arbitrage. And if we are the chartered accountant firm sitting here in Mumbai or in India anywhere, we pick up 4 or 5 clients in the UAE and deliver the taxation work from here, and maybe even take travel and go there. And I know certain chartered accountants from India who stay 15 days in Dubai and 15 days in India now. And they even try to spend more than 182 days outside India and get the benefit of the NRI and the tax benefit. Okay. So tremendous amount of opportunity. And I'm also eagerly waiting to listen to Manoj. Manoj is also the secretary of the Dubai chapter, and he's been there for a long time. And I'm sure he will be hands-on, practical, and tell us a lot about it. And all the best to everyone so that maximum of us take advantage, do well in life. And we remember the session of Manoj that we learned from him and we went and did something in the whole of Middle East or in UAE and our life changed. So with that, I think thank you, and over to you, Shweta, again. Thanks a lot.
Thank you, Chairman San. We all are really eager to hear from you, Manojji. But before that, I request to our Regional Council member, Saurabh Ajmera, to please give us a brief introduction of Manojji.
Thank you, Shweta ma'am. Friends, we chartered accountants are known for our proactive approach. And today also, it's really great that we are discussing about the opportunity in corporate tax at UAE. And our speaker is our own member, so it's my pleasure to introduce him. He's the secretary of ICI Dubai chapter. Manoj is a chartered accountant and MBA in finance, over 21 years of extensive experience in direct and indirect taxation, transfer pricing, international taxation, VAT, excise, tax planning and saving strategies, business restructuring, and setting up new projects. He focuses on international tax and advises on border transactions. Manoj is expert in creating and managing tax efficient structure with ensuring compliance in 14 different jurisdictions. He is a regular speaker on UAE tax and compliance requirements, and one of the most sought chartered accountant in the region on transfer pricing and international taxation. He has written number of articles, ebooks on UAE, VAT and corporate tax. So with this huge experience, I welcome Manoj Bhai over here. Over to you, sir.
Thank you, Saurabh. Thank you, Murtaza Bhai, to give me this opportunity, and thank you, Shweta ji, Vaibhav, and all WIRC team. Because really, I always feel proud when we share the opportunities to our fellow members. Because serving the fraternity, we all are here to serve the fraternity. I never find it is a competition between amongst us. We all are taking our own piece of bread. So we'll have to share more and more. So can I share my slide?
Yes, we can see you.
Okay. So now compliance nexus and opportunities in the UAE. So when we say nexus, what does it mean? Because UAE was known for a tax-free jurisdiction. There was no VAT, there was no tax. When we say tax, there was no income tax, but it was never a tax-free jurisdiction. There was customs, there was excise, there was income tax as well. And income tax as high as 55%. And branches of foreign banks, they have to pay tax on their income at the rate of 15%. So, but yes, for the businesses, for us professionals, for the organizations which are not into these specific activities of banking, means branch of a foreign bank or hydrocarbon, oil and gas sectors, they need not to worry about the tax. So this nexus start created in 2017 when Ministry of Finance UAE has introduced VAT, then came up with the excise, then ESR, UBO, CBCR, and now the corporate tax. So I'll take you through one by one with some idea that how it works. So GCC consists of 6 countries: KSA, UAE, Oman, Kuwait, Qatar, and Bahrain. So we all know about this. Now tax. So Saudi, no local, no state or no individual income tax, but yes, Zakat is there, corporate tax and capital gain tax only on non-residents is there, which is 20%. And since this GCC is highly depending upon the oil and hydrocarbons, then tax rate goes from 15 to 85%. And with a surprise move, Saudi has increased the VAT from 5% to 15% in June 20. Means within 30 months of the initiation, they increased the VAT rate from 5% to 15%. UAE, nothing was there for a business, for an individual. Then VAT was introduced in from January 2018 at 5%. Excise was also introduced, but it was not on the common public. So that is the reason it is not part of that. Corporate tax, we'll discuss in detail, and oil and gas tax of 55%. Same Oman. So there is no corporate tax. If you see in all the countries, there is no corporate tax except the Oman. Oman has corporate income tax as well as capital gain tax at the rate of 15%. Whereas Saudi, Qatar, Kuwait, they have specific income tax. Like Kuwait has only on foreign companies, Kuwait source income tax rate is 15%. Capital gain tax is also there. Same Bahrain. Bahrain does not have anything. No personal income tax, no corporate tax, no capital gain, except the VAT, which is 10%. And yes, hydrocarbon in this part of the world, which is called GCC, is highly depending upon those resources. So tax rate is high, 46%. Now, when we come to the UAE per se, because today we are going to talk only on UAE. So before jumping to the opportunities available in the market, I would prefer to give some heads out that what are laws applicable here. So like I said, tax, it was tax-free jurisdiction. That was the wrong myth. Taxes were there. So custom duty was there, municipality property tax was there, social security contribution was there, hotel tax, city tax was there, tourism levy was there. What was added? VAT and excise from 2017-2018 respectively. Then government has created a nexus, like they ask all the businesses to file for UBO declaration, then CBCR, then ESR, then 2015 CCA, Commercial Companies Act, got changed by in 2017. They added up some secretarial requirements. Then corporate tax. I have added one bullet if you have seen income tax. So that income tax, I referred that hydrocarbon plus the tax on the banking sectors. Now VAT. So VAT is a simple goods and supplies tax. There are 2 types of supplies, taxable and exempted. Again, the standard rated, zero rated. So the more and more complexities, these are creating more and more opportunities for us as a tax and finance professionals. So some again the heads out. This whether this screen is locked, I am not able to move that header.
So you log off, like escape, put escape button on.
No, now it's came down actually. Okay. So there are, yes. Okay, it's good, perfect. So taxable income, taxable supplies, exempted supplies, and some supplies are not covered, like governments and high C sales, and some different sales are not covered. So see that complexities, that what is taxable, what is exempted, what is not covered, gives ample opportunities for us to serve the profession by way of creating more and more knowledge sharing to the businesses, to support the businesses, to outsourcing, like Murtabhai said, that providing services being in Dubai, in UAE is costlier. Than there is an alternative options, which is outsourcing. Outsourcing the work, outsourcing the accounting work, outsourcing the compliance, insurance, outsourcing the VAT return submission, because there are different modalities of the return submission. Few businesses are on monthly basis, few businesses are on quarterly basis. It's a whole complex law that on what services or what goods you can claim input credit, on what you will not be able to claim input credits. Similarly, what is taxable, what is exempted, this gives an idea of creation of segment P&L, which is one of my favorite topic, because once you divide your activities in three categories, what is taxable, what is exempted, what is not covered, then all input tax you have to bifurcate based on the activities, based on the certain formulas given by the authorities. Registration, it was mandatory. If annual taxable supply for last 12 months was more than 375,000, those businesses has to register. Below that, so 187,000 to 375,000 dirhams, it was optional registration. With some snapshot on what the services or supplies are zero rated and exempted. Next one was excise. It's very simple. Carbonated drinks 50%, tobacco products 100%, energy drinks 100%, electronic smoking device, liquid use 100%, then device itself is 100%, and sweetened drinks also 50%. So this starts in the four categories: importer, manufacturer, stockpilers, and the exporters as well. Here in this part of the world, we do not need to interpret the law. Like in India, we do interpretation. Then we go to the assessing officer, we go to commissioner, we go to ITAT, we go to High Court, we go to Supreme Court. Here, one thing, whatever it is written in the law, that is the only law. No need to interpret that law. So if it says that registration of excise is only available for importer, manufacturer, and stockpilers, that's it. If you are buying material, excisable material from locally market and exporting, then you can't claim that excise paid, because law says you are not supposed to register if you are exporter. If you are importer, manufacturer, stockpiler, that's it. Then only you are supposed to register. And we have seen the cases where authorities taking literal meaning of the law, like as per a strict reading of the law. So this is a good part, and this is negative also for the law, because good thing is we need not to interpret, and negative is unless you interpret, there is hardly any opportunities of tax plannings. Then UBO. So UBO is ultimate beneficial ownership. So this everything they started when IMF put this country in gray list. So they started with ESR, then implementation of UBO, then so on. So first step to come out from that gray list was the implementation of VAT. The UAE was removed from the gray list, but immediately put in back within a month's time because of the rate. Rate of 5% is lowest across the world. So, but now they are introducing corporate tax with the hope that again there were chances that they will be removed from the gray list of IMF. So in UBO, why the UBO was implemented? Because no one is aware that who is the actual owner of your business. People are doing business, they are nominee shareholders, they own the business for someone else, but authority knows that the person whose name is registered, he is the only owner, but practically there is someone else. So to know that, the Ministry of Economy has implemented that UBO declaration, what the business is. And in that, what to declare? Anyone ultimately controlling more than 25% of share. And the added word through direct or indirect ownership, even right to vote. You do not ownership on the shareholding, but you have right to vote. Then also you will have to declare it as UBO if you owns more than 25%. Who all are fall under the UBO? Everyone. A legal person who is registered. So means even though you are not registered for excise, you are not registered for VAT, you do not do anything. You are an offshore entity. Then also you need to register. Then everything has to submit it with the documentary evidence that who is the UBO. Even if it's a listed company, then who all are the director of those listed companies. Complete detail, including place of birth, passport copies, and what is the basis that how this individual is going to become ultimate beneficial ownership. In case of listed entities, yes, earlier that option was not there. Now, last couple of months back, that option has been activated that you may mention that we are part of a listed entity. Then, like in India, we submitted 3 CAD forms and all. Here also things are there like country by country reporting. So this goes with the detail that yes, what you need to submit, like what are the transaction between your related parties. So till now, government was just collecting the information, and we all chartered accountants or finance professionals are innocent. Innocently, we were submitting. Okay, government wants. So now what is CBCR? They have done. They implemented BEPS Action Plan 13 of OECD that everyone should declare, especially the M&E groups, that within how many jurisdictions they do the business and what is the relationship. EU, like I said, EU also blacklisted UE. Then some restrictions were there, and especially the European companies, they are not able to invest in the country because of certain restrictions. So they authorities is implementing one by one, like UBO, CBCR. Now next we'll move to ESR. Now for that, every 12 months there is a return. So notification. So initially, because government was not aware. So simple thing. So this was the first point of starting a compliance nexus, that they should know for whom you are working. ESR. Now that was the, you can say, the final nail to the coffin, ESR. So initially, they issued a circular that, okay, you submit the ESR notification. We just wanted to know out of these 9 activities, what all you are doing. Now, if you see the activities, so if you see the activities here, first one is the headquarter business. Means you are declaring you are part of a multinational group. If you are only holding company, investment and fund management, IP, banking, insurance and lease finance, and shipping and distribution and service center. Now, I always suggest everyone connect the dots. So here, if you connect the dots, these all 9 activities are the biggest or the easiest way for the tax planning. You may create a head office here without doing anything. You may create a holding company in any tax-free jurisdictions, keep declaring the dividends, just withholding tax will be deducted, not the actual tax on the income. And that is the reason these all are being generated or created. If you are aware that global minimum tax rule, that 15% on the M&Es with the business more than 750 billion euro. But this ESR was applicable for everyone. Why? Because basis UBO, first government has collected the information with whom, to whom you are working. CBCR, they ask you to declare that are you dealing with other countries? Yes. Then the last nail was this ESR. Why you exist in UAE? So ESR, what was the ESR? Economic substance. So a free zone company, an offshore company, if they exist in the UAE, the simple question, why do you exist? If you exist within these 9, then there is lots of compliance. So now in this also government played very tricky. What they've done, they said, okay, first file the notification. Do you fall under these 9 categories? Yes. So businesses happily filed. But what happened after 6 months? They issued 2 decisions, which is generally called as cabinet decision, then notification. First, we will share this information with our foreign jurisdictions if they ask for it. So go to the UBO and CBCR. We have already declared to the authorities. Now this ESR. And then after a month, they released a report form that everyone who has submitted the ESR notification has to file the report. Now report says that quantify the business on these 9 activities. Quantify that yes, these businesses are directed and managed in UAE. You have enough number of resources to carry out those activities. You have sufficient assets exist in this country to carry out these activities. Now you see if headquarter business, one business who disclosed that they are into headquarter business. Now what is the catch here? This place of effective management, right? So nobody was aware that corporate tax is coming, or UAE authorities are going to capture that place of effective management also in that corporate tax. You are only a holding company, then it's good, but only pure holding companies are allowed. So as per ESR, as per OECD ESR guidelines even, that holding companies are not supposed to do any other commercial activity. When we say any other commercial activity, means even lease finance or giving short-term loan, interest-bearing loan to their group companies. The only exception is allowed that whatever money you have, and if you are getting regular interest income, then only you will be considered as pure holding company. If you are doing arbitrage of that fund, you are investing in bonds arbitrage, then you are generating revenue. So you will lose the status of pure holding company business. Investment fund management business, generally these activities are for third party. So in corporate tax, they have covered this, that investment and investment funds may apply for exemption from corporate tax, subject to condition that they should not create a PE for their investors. Means the product which they are dealing with should be available openly for anyone. So they can't hold. Generally, investment funds, they start holding the shares as nominee shareholder by creating trust and all. So in corporate tax, everything has been chopped out. They covered everything. Banking business, we know, insurance, lease finance, shipping. The last one is the distribution and service center. So distribution and service center, they mentioned that in ESR, if you are dealing between your related parties, your subsidiaries, your branches, your parents, or any of your group companies, then you will fall under DSC, distribution and service center. Now you have already declared that yes, we are dealing in report, ESR report, we have declared the quantum also. Now, how are we going to plan in the corporate tax? Because things are talking with each other. So they created a trap and we fall into that trap without understanding the future course, future impact, that how it is going to impact us. Applicability on everyone. If you are conducting a relevant activity out of these 9 within the UAE, you submit that. The only exclusion is the government. Okay, government is their own money, they do whatever they wish. If this ESR was applicable on all free zone entities, even your branch office or LLC or subsidiaries or representative office, if you are part or do not part of any M&E group, but you are conducting one activity out of these 9, then you declare. Now, believe me, ESR report is going to be the first start point for the corporate tax because we declared. Now we can't plan even transfer pricing because we declared in the ESR report that what is the value of my purchases with my related parties and at what price I am selling it to the third party. The next question is, am I selling something to the related parties? Yes. So I've already declared everything. Now, where is the planning scope? Is very thin now, but we submitted. Now, before moving to that key topic of opportunities, I would like to take you through with the corporate tax. Now, this is applicable. You must have gone through with the Google that it's applicable from the financial year starting on or after 1st of June 2023. There are two tax rates, 0% and 9%. 0% if your taxable net accounting profit is up to 375,000, then it's a 0%. And if your accounting net profit is more than 375,000, it's 9%. There is third category also, which is exempt. So corporate tax law is very simple. It's not complicated. Only 70 pages law is there, 70 articles. Out of that, 8% of law covers my favorite topic, transfer pricing. So there are 4 articles, 5 articles for exempt entities and 5 articles for corporate tax, transfer pricing. So 10. 1, 2, 3 is for initial discussion. Last 4, 5 articles are for closing, opening balance sheet, Article 61 transitional rules, then 55 for transfer pricing documentation and all. So summarizingly, for us to read is hardly 40 to 45 articles. Now see, the law is too simple. But really, it's not that simple because complexities are more when things look simpler. Then exempt person, government entities as usual, extractive, non-extractive business, qualifying public benefit entity, investment funds, social security funds. More or less, government businesses are exempted, but this has one condition, that if your revenue, they are saying revenue, if your revenue of non-exempted businesses are more than 5%, then you will fall under taxable category for that income. So means within the government entities also, whatever activities they are doing as sovereign activities, only those are exempted. For extractive, non-extractive business, if you are doing those activities and plus you are doing some rental income also, let's say you owned a building, you are doing an extractive business, non-extractive business, but you have given that 2-3 building cluster of the building on the rent as well, but that revenue is more than 5%, then that revenue portion will attract tax. Now to define the tax, you need to again create a segmental P&L. Then when you do the article 5, 6, 7, 8, they states that when you do the transaction between the exempted income and non-exempted income, then it should be governed as per article 34, which is the transfer pricing, arm's length pricing. So whole law talks about transfer pricing. So 34, 35, 36, 55, 61, 50, 6, 7, 8, 9, then 18, then 31. Everything talks about transfer pricing. We'll discuss in detail way forward. Then applicability, all legal person, foreign company, natural persons and engaged in business activities, and if you are non-resident creating a PE. We may say that there is no income tax, personal income tax, but there is a clause that a business activity will fall under the corporate tax comment. So I can do, let's say, freelancer. So in general, freelancers are not required to get a license globally, but in UAE, even influencers, social media influencers are supposed to get the license from the authorities. Same goes with the freelancers also. There is no freelancer. We say there is no free lunches. Same way, there is no freelancers. Everyone has to take a license. But to expand this nexus, they added that any business activity, it is required a license. Means whether you own a license or do not own a license, then you need to fall under the corporate tax comment. So we may say, like in India, we say, I do not have a license. So when I do not have a license, I'll just submit the personal income tax return. Nobody knows. But here government has added that you do not have a license, no worries. We are not talking about license. We are talking about the economic activities. You are carrying out business activities, get registered yourself. So if you have seen in VAT, there was a limit of 375,000 dirhams for taxable supply. Then you are supposed to register. Here there is no limit. Even though you do not do anything, get registered first for corporate tax. So all the business, all 800,000 business registered offshore, onshore, representative office, branches, you are creating a P, you are creating a poem also. So place of effective management in India 2017 they implemented, but here it's already implemented before the law comes up. And on top of that, if you see that law is effective on the financial year starting 1st June 2023. There is Article 61, transitional rules, and read with 69. It says that law is applicable within 15 days from the date of release in the official gazette. So official gazette, it was released on 3rd of October 2022. Add 15 means law is very much in place from 18th of October 2022. But we give some advices that no, it's not yet applicable. Due dates are very fantastic, lucrative. So a business, assuming generally from June, July, there are number of less businesses who fall under this, but general financial year here, people follow the calendar year. So people are happy that yes, mine is January 24 till December 24. Then I have 9 months to submit the return and to make the payment. So I have 12 plus 9, 21 months to plan. So my question to those people that what if you have already taken a limits from the banks? Because banks, they want you to submit the returns within 3 months of the end of your closing years. So December 3rd, 24, you need to submit by March 25. Then where are the 9 months? You have only 3 months. If you will not do anything, and if you wish that next 6 months you will do something, then next year audit report, auditor will write prior year items. And it may constitute as a qualified report also. And very smartly, here what government has done, they have released couple of circulars kind of things or cabinet decisions. Like there was a whistleblower policy they released for the tax. Then there was some auditors ethical system they have put in place. For what? To create a framework, which is called compliance framework, that yes, we are going to implement the corporate tax. Now the auditors also has to be more worried while signing the report, because bank may ask n number of questions. Now we need to follow the same process which we are following in India. What is the value of transaction with related parties? Who all are your KMPs, RLPs? How much transactions you have done with your related parties, whether within UAE or outside UAE. Here also domestic transfer pricing will be applicable because these are 3 tax rates. One is exempted, one is 0, one is 9. But surprisingly, that article 34, 35, 36, they don't talk about that different tax regimes. This says a transaction between the related parties or connected person has to be at arm's length pricing. So even though all the entities are in 9%, then also the transfer pricing is required. Why? Because there is no personal income tax. I am the shareholder of my company. I am working as CEO. I can do a transfer pricing study to justify. But why my wife is getting the salaries? What is her role in that business? So that to curb that, because there is no personal income tax. That is the reason that open-ended. That if you are dealing with your related parties or connected person, transaction should be, the value of the transaction should be arm's length pricing. So means everything is covered. Yes, some reliefs are there. Small business relief, non-resident person operating aircraft and ships, only these. And participation exemption, we'll discuss little bit. Business restructuring, tax losses. Good thing is tax losses can be carried forward for indefinite period. but do not confuse with the interest. There is a ceiling as per Article 28-29 that interest can be deducted only up to 30% of the EBITDA. And now in here we can apply the interpretation. Though I said it's not necessary to apply interpretation, but here we can say because EBITDA may be lost, then safe harbor will apply. We expect that. So cabinet decisions, so which VAT talks about executive regulations, whereas for corporate tax, the law refers cabinet decisions because all the powers are vested with the cabinet, Ministry of Finance. Now, just give you some heads up on the corporate tax, so it will easily link you with the opportunities or options are available. And not only in UAE, these laws in the UAE gives ample opportunities for other overseas jurisdictions as well, especially when you are dealing with the GCC countries, because they follow each other. Oman has tax, UAE has tax, Saudi has tax. Now, we are talking about UAE, but since UAE has already implemented the VAT and corporate tax, then there are certain adjustments which may be required in Saudi and Oman as well. So opportunities are there in those countries as well, in terms of the planning, in terms of the restructuring, structuring of the transactions, related party transactions, and so on. So juridical person, whether incorporated or non-incorporated, resident person have a permanent establishment in UAE. Now with this corporate tax, I told you about that 15% of foreign branch income tax that will be abolished. They will fall under this. So we expect that branches of a foreign banks will be in benefit by 6% of the tax, because this tax is only 9%. If a business is registered for VAT, then yes, they have to register for corporate tax. Now you see the opportunity. I may have created a group for the VAT purpose, but I may not qualify to create a group for corporate tax. What does it mean? I need to prepare a couple of sets of books. One is as per VAT return, one is as per income tax return, one is for my consolidation purpose. So again, it gives the opportunity to create multiple segmental P&L, multiple reconciliation, which generates the opportunities for us as a finance professionals. When we need to do these three activities, then it gives a option to the business to streamline their operations, to create standard operating procedures, to define the SOPs, to define the delegation of authorities, to analyze their business. Are these activities which is being done by an individual here or by a company here creating a place of effective management in UAE? Then global income taxes, global income rule is applicable. So opportunities we need to generate ourselves. Now taxable income, we discussed 9% and 0%. There was a question that what about the free zones? So the authorities have used word qualifying free zone income and qualifying free zone. Don't worry, free zones are still continuing enjoying the 0% tax as per their treaty, but only on the activities which qualified as free zone activities. Like in India, I believe that SEZ entities are not supposed to deal directly with the mainland entities. There must be some intermediary in between. Whereas in UAE, law is there. Each free zone has their own decree, but government is allowing to deal with the mainland. Till 2015, free zone entities were allowed to have the branches in mainland and vice versa. After 2015, they gradually stopped issuing the licenses and all. So what does it mean? Each free zone has its own decree, and this decree says no corporate tax on the free zone activities for next 20 years, 25 years, 30 years, 40 years, 50 years, which can be renewed. So this benefit is ranging from 30 years to 50 years on renewal basis. But tax exemption, or we can say it's a 0% only on the qualifying free zone income. Now, what will be the basis of taxation? Residence. So both are taxable, resident and non-residents. Legal person, foreign companies, of course, if incorporated in UAE, then worldwide income. Foreign companies, Now you see here controlled and managed in UAE means place of effective management. Then worldwide income will be taxable. Natural person, if they are carrying the commercial activities within UAE, then only UAE source income will be taxable. In case of non-resident, again, only UAE source income will be taxable. Generally, it's in terms of P or representative office, or you have a branch, warehousing over here, and some nexus if they create, which is basis which that business activities or income on those business activities should be taxable. This point is more to do with that global minimum tax rate. Like you created a P, but then nexus is there, then 15%. You need to pay the tax. Of course, free zone companies, if you are not doing or you are doing activities beyond your capacity. Capacity is free zone activities. Now, what is the UAE source income? UAE source income is generated from UAE from a non-resident person where you can attribute that P in UAE. And the third is income accrued or derived from activities performed within UAE. Even if assets located, capital invested, rights used and service performed. Means an insurance company who is selling the insurance. First of all, that property insurance and property all risk, loss of profit insurance is to be taken only from the UAE resident insurance providers. But what if it's a life insurance? So if a company who is providing life insurance, they are generating revenue from me without any presence, then their UAE source income will be taxable. So generally we take that personal insurance, medical insurance from foreign big corporates, big insurance companies. So if they are generating the revenue, they have to register themselves and they need to pay tax on that. Some incomes are exempted. Generally, they like dividends or profit distributions. Juridical person, if you are getting something from non-resident, from resident person, non-resident persons, then that income will be exempted, subject to certain limits. You must hold shares of more than 90-95% for more than 1 year or 2 years, which goes line with the global policies. Second thing is the foreign tax credit. If you have paid some taxes, which is supposed income for that is supposed to be clubbed in UAE, then yes, foreign tax credits are available. There are two options of claiming this foreign tax credit. You may opt. So option is irrevocable from the day one. Means while submitting the first return, business is to choose and which will be the irrevocable. You have two options. Either do not add that income into your income or take credit. So first option or second option. But these options are applicable if that other jurisdiction has tax rate of 9% or more. So assuming US entities where tax rate is 20% and I have a branch in US. So on the year one, I will have an option to add that income into my taxable calculation of my taxable income, or I may say, no, I'll go for the foreign tax credit. Now, how businesses will decide? Again, believe me, it is again giving an opportunity to the finance profession so that they can create a cash flow, a profitability statement for next 10 to 15 years for all such entities where there are chances that their income will be merged for the UAE tax purpose. So what will be the more beneficial, to opt as addition of your country's entities income into your income, or opt for a credit? Because unutilized FTC is not available for carry forward. So this is another set of business opportunities for the finance professionals. Now there is some participation exemptions that yes, if tax havens, generally no corporate tax, then those incomes will not be exempted income. So let's say you have a company in Isle of Man which declares dividend. Isle of Man has 15% tax officially, but they have not implemented that on any company, right? So just merely having income tax of 15% will not qualify UAE entities of exemption on that dividend declared by Isle of Man or Delaware companies or some tax havens. Permanent establishment test, it goes as the word says, that fixed place of business. Yes. Now the second check is dependent agent test. That are you depending upon that foreign entity or you are working as independently? So generally we have seen that if independency is there, then yes, you are creating a PE for that foreign entity. But if no, you are working as independent, like distributor of cars, Toyota, Nissan, Mercedes, they are working as an independent agent. Then they are not creating a PE of that foreign entity. But if it's a dependency, like a distributor or an insurance agent working only for Zurich. Now, in case of my example of that Nissan Toyota, that agent has to substantiate that they are working independently. Though they are only dealing with Nissan and Toyota, but who is the decision maker? Can they decide their own pricing? Yes, they can decide. Who can negotiate and conclude the contracts? Yes, local distributor will be able to conclude the contracts. Then it's okay. So it means you are not creating a PE. But as soon as you said no, pricing is to be decided by my foreign supplier. So means you are working for that foreign supplier. There are certain categories which has been established, like fixed place of business, office, employees, staff, director, residence here. Then you are creating a PE. Recently, there was a case, I think in some country, I missed that name. So that CEO, you know how that created a PE in that country? That company where the CEO was working, they have allowed that, okay, 3 days in a week, you can work from home. And 2 days, you have to come to office. Now, CEO was also taking advantage to 3 days in a week, he is working from home. Means he is residing in different country. So those tax authorities decided that you are working from this country for someone else, means you are creating a permanent establishment of that foreign company in this country. And that decision was continuing till the highest authority of that country. And they constitute that, yes, there is a PE being created. So again, so this type of activities means what this gives us the opportunity to understand the business, then give them some solution. And after solution, implement that and then ensure regular compliance. Because papers speaks. When you say that, no, we are acting independently, but your agreements are being approved by your foreign company. What if a company is having a representative office only in UAE? They may say we are merely supporting our distributor, but then authorities will see who is the decision maker. Placing order is okay, but who is the actual supplier for that goods? Who is generating the brand equity here? Who is helping the distributor? Who is interacting with the retailers? So who is doing what? So same, when it comes to the PE test, is kind of a transfer pricing test. Tax losses, yes, it's allowed. Though it's kept 75% of taxable income. You can carry over indefinite period. Then transfer of tax losses are also there. We discussed on the tax grouping is also possible here. Certain conditions are there. But if you do not wish to create a group, then also there is an option to adjust the losses of one entity with other entity. Now here, if you see the opportunity, like what will be the beneficial for the businesses? To continue the same setup, register independently, do not claim the transfer, do not transfer the losses, or to create a group. So these are all a part of the assessment, then implementation, then ensuring, because there are certain conditions. So these opportunities are ongoing, because condition says that 50% ownership should be there, and that should continue for minimum 2 years from the date of you adjusted the tax losses. Means it's a continuous process of reviewing, analyzing the business activities, analyzing the shareholdings, and then advise to the clients that when they say that, okay, we are going to sell the business, then you can suggest different modalities, because sale of business is allowed to carry over the transfer of losses. But there are certain conditions that more than 50% business should continue. Now, what constitutes that more than 50%? Assets, revenue, employees, that is our job. So we can advise the clients on a regular basis. tax losses or tax loss relief, juridical person, resident person. You can't adjust with the qualifying free zone person. No group tax loss or transfer of tax loss is possible with exempted entities. Two unique conditions to reduce the burden on administration, that financial year should be the same and same accounting standards to be followed by both the entities or the entities which are planning to create a tax group or planning to transfer the tax losses. Now you see financial year same. GAR provisions are very much in place. Article 50 of corporate tax, that businesses should not do anything as per GAR, general anti-abuse rules. Same ways, changing the financial year is not a solution. It's not an upfront solution. But restructuring comes in a very big way anyway. Like if a business is doing 50% of their revenue through high C sale transaction, then subject to other conditions, you may suggest. Now your suggestion, if accepted by the client, then it gives you different revenue models, different synergies. First of all, creation of an entity in free zone to carry out the high C sale transaction, then to set up their processes, then accounting, then audit. Yes, free zone entities have to do the audits. That is mandatory for them as per law. Not sure about other business entities, means outside free zones, but for free zones, two things are mandatory. One is audit, second is economic substance. So we discussed about ESR. ESR is being implemented for free zone entities. Then common ownership should be there. So we can plan the things that way, that because it says directly or indirectly. So again, opportunities. Transfer pricing, we all knows about that. Little bit stringent conditions in UAE. They said that Article 34 states that OECD will follow the OECD, but ownership criteria is 50% or more. Whereas tax group you can create when you will have minimum 95%. This is a conflicting provisions, but like I said, no need to interpret. Law says arm's length pricing, if you deal directly or indirectly owns, controls the profit, shares, or composition of board of directors, then it will be considered as related party. Right? Even exempted, non-exempted, we discussed. Scope is very wide. Now, related parties. Now, you see the first bullet, it says that individual within fourth degree of kinship. This kinship is by way of adoption, by way of affiliation. Now, fourth degree, it's quite complex. Fourth degree means I am the object, then my parents, grandparents, great-grandparents, and great-great-great-grandparents. Up till their fourth degree. Then individual ownership, minimum 50%, directly or indirectly. Your family members may own, but since they are your relatives, you have kinship with them. If you are owning 50% together, then you will be considered as related party. Branch and P, generally partners. Here is one concept of unincorporated partnership, which means like 2 or 3 people together can start something. What they start, general perception is like they can buy residential property or they buy a commercial property and so on. So for those is called unincorporated partnership. In registration department, registration is allowed for them. Then connected person. Individual ownership, interest, control, directly, indirectly. Director officers like KMPs we declare, relatives of these owner, directors and officers up to 4th degree. Then partners of unincorporated and related party of any above. So it's very open-ended, inclusive definition of related parties and control. Now we'll move that by UAE. World Bank ranking is 16 in 2020. And 2020, it was 16, 2022, it was 20 actually, because of this VAT, ESR, UBU and all. But ease of doing business is the best. I used to give this example we go in any other country then we say, oh, police aa gayi hai, cut low. Here it gives a different feeling. Oh, police is there, it's good. I haven't seen in 17 years even a 1 minute of power cut, no water scarcity, infrastructure is tremendous, best. You just advise something to the authorities, they will listen to you, or they will say, we will do something on that. Over the counter, you will get the business licenses, list is written, you keep following the systems, no bribing. If something is there, that may be at the top level, but it's not harming us. So you go and everything is systematic. Like if you need a license, which may take 15 days, but you want in 5 days. So there is separate fees for that. And there's fees, means you need to go. There are counters, bank counters, means authorities are not collecting fees here. In every authority, there is a bank counter. You go there, deposit into the government account. If you want within 5 days, you pay extra to that. Means again, is the charges. Let's say within 15 days, 10,000. Within 5 days, 20,000. Over the counter unit is 20,000. So go to the bank counter, pay 20,000, submit the receipt, get your things done. Now, why this? Again, we discuss economic environment, infrastructure incentive, bank, there is no limitation on any banking transaction. And yes, safety, security is there. Though it's a Islamic, declared Islamic countries, but you may have seen that multiple churches are there, temples are there. Now the biggest temple is coming in Abu Dhabi. So they work with the harmony. It's a true business. Government is working as a business. They're running a corporate. Country is yes, but they're running a corporate. Now the major segment of the opportunities we discussed in detail, but see, my advice is to everyone that how somebody will come to know that you exist. In my recent trip to India, I was fortunate to have sessions with the Agra branch and Mathura branch. So I asked one question. If somebody will Google, how they will come to know that you exist in this world? Out of around 80, 90 people were there, CAs attended that Agra session. I asked how many of you has LinkedIn account? Only 4 has the LinkedIn account. Website, everyone has the website, but they have not done anything on that. They just applied for GoDaddy.com, 300 rupees. For 10 years, they got that name. Then how the opportunities will come to you? If, let's say, I'm a foreign resident, I am looking for services in India, transfer pricing services in India. Don't afraid of Big 4, Big 10, Big 20. Before becoming 4, 10, 20, they were also small. But there was a systematic approach adopted by them, which is called existence. If I will search for an outsourcing firm in India, accounting outsourcing firm in India, then out of this 200 people attendees, only 5 or 10 we will found they are available on the digital media. So now today's world is digital. Out of 200 attendees, 150s are providing that services. But how do I know sitting in UAE that you are providing those services? So for that, my personal advice is increase your digital presence. Interact with people, develop your websites, spend some money. As a professional, my guru told me in 98 that as a CA especially, we are selling ourselves. When they say we are selling means ourselves, we are selling ourselves means we are, who knows that what we do? No one knows. When we go for interview, they ask us, interviewer, what you will bring. Memes are there that you invited me, that's the reason I'm here, but that's not the truth. That's not the fact. We have to tell them this is what we do. That is the reason we prepare our own CVs. What is the CV? It's a summary about us. Same goes with the professional firms. What we are doing. We are happy with 200 clients. We are happy with 15, 20 rates every year. Yes, then we are not looking for the opportunities. We are happy with that. If we really want to explore, there are 2 ways to explore. One, we are approaching, and second, others are approaching us. So when we are approaching, you have to come here. You have to meet with the people. You should know who's the right person. But opportunities are more when others will search you. If not only in UAE, if some business in US, they may need some accounting outsourcing. They may need some tax opinion. Their employees may be some Indians, so they may look for some tax planning avenues. When you will have websites, you teach them, you inform them that there are ample of opportunities in India. Come and set up your business in India. So we'll discuss on this in detail after the presentation. So statutory audit, internal audit, FT audits, accounting. We discussed on that. When you create a structure for a business, create a process, then it lead to the internal audits, process audits, process automation. FT is doing audit, then of course they need the support from financials. VAT compliance, excise compliance. There are tax agencies, means the people who are registered with FTA, Federal Tax Authorities. New thing came up suddenly, that ICV, in-country valuation. So country is working that minimum 40% you should add value when you are dealing with the government agencies. ADNOC, which is the largest oil and drilling company, they made it mandatory. The more local value addition you will do, the more preferred you will be for their services. Even you will not be registered if your local value addition is less than 40%. ESR, notification is very simple. Yes, we do. Yes, we do not do. But when it comes to the reporting, now connect the dots. Your information should match with the VAT. Your information should match with the excise. Now corporate tax. Whatever you are declaring, the related party transactions, who owns those IPs, who runs the company, who takes the managerial decisions, those things should speak. Because if you say that everything is done by, let's say, I have India UBO, he is doing everything, then for what? Or if you say, I'm doing everything globally, then I have created place of effective management for my subsidiaries also. So those things will come into place. Taxation, we know, nobody knows the tax here. Corporate tax, which lead to the international taxation, transfer pricing, country by country reporting. Ultimately, it leads to the restructuring of the transaction of the business entities, of the ownership on their existence. And IFRS. Law states that we follow IFRS, International Financial Reporting Structures, standards. Nobody knows about that except few MNEs, few big corporates. So IFRS advisory and IFRS, innovations are being done. Say it's IFRS 15, 16, 17, 18. So those are some key. People don't know, businesses are not aware how to implement that revenue recognition. For them, converting CIF terms to FOB is best. Make it FOB, we'll recognize the revenue. But we know that it's not the way. AML, anti-money laundering. Sorry. The government is quite aggressive on AML transaction. Then advantage of DTA. UAE has more than 90 plus treaties. Now the actual use of those treaties will be there because now they are implementing tax planning, the favorite topic of all the chartered accountants, how to minimize the tax. So when we say tax planning, we are not talking on the evasion. We are talking of the minimization of the outflow on account of tax payment. That is very well under the purview of the law. Let me watch it. Internal control, ICFR, India is aggressively working on that. Gradually, UAE will also do that. Then SOPs, governance risk compliance, investigation, frauds, forensic audit, ERPs, due diligence, transaction valuation, debt collection, equity syndications, fraud recovery, settlements. When everything will grow, these last three bottom line will also grow. People will prefer to sell the business. They will come out from the loss-making businesses. So for that, due diligence is required, right? Then debt, equity syndication is required. Valuation services are there. Currently, only few players are there. So it's a open market for all of us. CFO services, few small businesses, they can't, like Murtuza Bhai said, they can't afford to have the proper accountants. They will outsource. You outsource the CFO services also. You must have seen that IPOs recently. Today, ADNOC is bringing the IPOs. It's a big industry. Secretarial services. Businesses are not aware how to maintain the secretarial record. When we ask secretarial records, they say, what is that? They don't know that there is a register of shareholder, there is a register of directors, the registers are of register of KMPs, there is a register of board meetings. Everything is there, but nobody is bothered about CCA, that Corporate Commercial Companies Act. Law states everything. Government is not asking, doesn't mean that we don't need. So as a finance profession, we need to approach the customers, that businesses are our customers. We need to tease them. We need to share our knowledge with them, that yes, you need to maintain. When you start maintaining, they will see the value addition. His client is yours. HR, payroll advisory, business setup, transformation, liquidation, arbitration. When companies are not surviving, they will go for liquidation. And believe me, liquidation is not easy. Here, like I said, within 3 hours, you'll get a license, but it will take 2 years to liquidate that license. So to advise the client whether they should go for a new license, or they should continue, or they should liquidate, this is another opportunity. Now, there are different types of business activities in UAE. You can create it now. 100% ownership is also there. You can create your LLC company. You can create your branch, representative office, free zone, multiple options, dual license are also there, joint venture, unincorporated partnership. Now I said 100% foreign ownership. Banking is public, not a public information, no public registry here. So your information, whatever you have, it will be with the authorities only. If you are into free zone, doing some free zone activities, still exemptions will be there. No restriction on currency, no restriction on repatriation. Now this virtual offices are also allowed to get the licenses. So you can get that one of the license without even your physical presence in here. No minimum share capital is required. When I say minimum not required, in memorandum it has to be written, but not in the bank. So government says that, okay, you write minimum capital, let's say 100,000 dirhams. As a shareholder, I declare that I have that money. That's it. So advantages of free zone, everyone knows some popular free zones. Then everything is available in free zone. Services, export, processing, manufacturing is like replication of SEZ in UAE. So I have done now. Thank you very much for patiently listening to me. Over to you, Vaibhav and Mr. Jabai.
We request all the participants to please type in their questions in the chat box. There is one, Manoj, in the chat box. I think if you can see also, but in the meanwhile, we'll also read out. I have been in UAE for 17 years, established VAT for one of the biggest companies in Abu Dhabi. It's also good to see the awareness being created. Opportunity superb there. Nice session. Great. Bhushan Arora ji, thank you very much. Thank you for your compliments and good comments. CA Mandar says, can we get the PPT? Manoj, will it be possible for us to?
Yeah. I'll share with Vaibhav and then you can decide accordingly.
Sure. So Mandar ji, we will get the PPT and we'll upload on WRC website, so it will be possible for you to download. I request all the participants, I can see still 168 people inside. If you can type in your questions in the chat box, then Rudesh or Saurabh Ajmera, my regional council colleagues, will read out to Manoj ji, and Manoj ji will be kind enough to answer a few questions.
So I would like to add something here. Like I said, we want to grab the opportunities. But my question to all the participants, how?
I think your voice is a little softer. I think you have to speak nearer to the mic.
Mine? It's okay.
Achha, okay.
Is this audible?
Is audible.
Okay. Yeah.
So what I'm saying that when we want to explore the opportunities, but how we will explore, we don't know. So that was a surprise when I asked these branches that how many of you have LinkedIn accounts? We all may have LinkedIn accounts, but what are the activities? Nothing. We just created. Now, who is promoting ourselves? We have to promote. We need to give ourselves as an option for the one who is looking for the opportunities within us. So we need to showcase ourselves. When we approach someone that, okay, when we approach someone that hire us, what he will do, he will say, okay, share your profile. And definitely they are going to check you on the digital media, that what you do, where you exist, nowhere. LinkedIn, you will see only 3 followers, which is 2 staff and 1 yourself. Then how we will get the opportunities? So we need to create those opportunities for ourselves. In-country valuation, things to be known to members and known to it. Sir, it's very simple. It's like local value addition. To get a certificate of origin, simply, to get a certificate of origin, UAE law states that you should add local value minimum to 40%, because UAE is primarily a trading hub. People imports multiple things, then they add value and they sell it to someone else, maybe within UAE or export, which is called certificate of origin. Authorities are issuing 2 types of certificate of origin. I may import something from India, I may sell it to local market, or I may sell it to, or I may export it. Still, I will get the certificate of origin, but it will be written country of origin, India. Now, to do it as UAE, I need to add 40% value. Value in terms of labor services, value in terms of production improvement, value in terms of the packaging, land, rent, electricity, water. There is a complete value chain. So in that value chain, we need to add minimum 40% to get a certificate of origin, country of origin, UAE. So this is the same replication to ICV. Now in-country valuation. So minimum condition is 40%. The ADNOC has added advantage that whatever more you will add, you will be considered as more preferred service provider or a supplier to ADNOC. The ultimate idea is to generate again opportunities within UAE for the locals to support the economy. By generating more, you will pay more here. And of course, by generating more, you need more foreign experts to support your business. So you generate, more you add to the economy directly and indirectly. Now there is a question, how we get TRC in UAE? It's very simple. Go to fta.gov.in. There is a section, tax residency certificate. There are 6 conditions. Fulfill those conditions, you will get the TRC, tax residency certificate. One condition they've added, you should be stay in UAE more than 182 days. Now, how to get the detail? You go to immigration department. There is a counter. You pay 210 dirhams. They will give you your Janam Patri from the day you landed in UAE till today. So in that you keep calculating that in last 12 months for which you are applying for TRC, you are here for 182 days and more. So it's very easy, online. Submit the document, you will get the TRC.
So there are a few questions in the chat box as well. I'll request the members to kindly post the questions in Q&A box. Sir, that in the chat box, there's a question.
Yes.
If we have not done any work of overseas, how can we start getting it?
If we have not done any work of overseas, how? It's the same like when we started doing CA. So when we got admission, same way. So we analyzed multiple options that whether should I take commerce in 11th, should I take biology, should I take maths, arts, which is called humanitarian. So same way. Means nobody is going to serve you in a plate. We need to define, we need to decide our appetite. Are we willing to invest something? Because आज की जो रेट है वो 22.5 है, तो आपके 22.5 लाख यहाँ का 1 लाख है, उस 1 लाख में लाइसेंस आ जाएगा, एक छोटा सा ऑफिस आ जाएगा, 2 स्टाफ आ जाएगा. बट व्हाट नेक्स्ट? सो एपेटाइट, alternatives. See, everything needs investment in terms of time, investment in terms of money. So when we decided we will go for commerce, we have invested 11 12, we have invested first year, second year, third year, then 3 years for exams. So after 10th, after 8 years, I became chartered accountants. So I invested my time, but we decided. So same way, first option is to decide what we want to do. Yes, we want to expand our business. Then what are all strategies over there? Then if our financial supports, we can straight jump to a conclusion that, okay, let's expand physical presence in UAE, or we can explore through our existing clients. You have to educate your clients. I have met a couple of CA friends. They say, we do not have any overseas client. You do not need an overseas client. You should educate them that they should expand their business. So once they will expand, then of course opportunity is yours. So you can opt that methodology as well, or you can start some marketing thing.
So next question in the chat box is, please explain ICV, that is
I
in-country
think
valuation. Yes, sir.
Rupesh bhai,
I
it
see it's
already
done.
explained, I think, by Manoj bhai. Am I right, Manoj bhai?
Yeah. ICV is already done.
So it's really wonderful session, and which we all needed.
Oh, there is one more, Saurabh, one more. What kind of government registration is required for opening branch office in UAE? Nothing, simple. Bring your memorandum of association, certified, legalized, attested, good standing certificate, your existence, your passport copy, shareholder's passport copy, visa means the residency detail. Come to the zone. If you want to open a free zone, if you want to open a branch in mainland, go to the counter. Believe me, here by visiting even police station, you will feel it's a clubhouse. Forget the government offices. You will be assigned one point of contact. They will keep following up with you. You have to deal only with them. So it's a corporate. Government is working as a corporate here. So it's very easy. Bring the documents. If you do not have, that person, that point of contact will advise you what all documents they need. You can do, or you hire a chartered accountant like me who will help.
Really wonderful, Sin. It's really a wonderful and well knowledgeable, insightful session. I believe that all the participants will get benefit in terms of future working. And to propose well-deserved word of thanks, I have my regional council colleagues here, Rudesh Pankania. Over to you, Rudesh bhai.
Thank you so much, Saurabh bhai, for this. And first of all, let me thank all the members. I think it was an amazing session today on this topic. We are very glad. Manoj sir, you said yes. And let me thank you on behalf of the entire WRC, our chairman, Murtuza Kachwala, Shweta Jain, secretary madam, Saurabh bhai. Thank you so much. And we're very glad, Manoj ji, you've made sure to explain all the points in detail and solving the doubts of all our members as well. Very glad, and thank you all the members. I think at WRC we've got a lot of amazing sessions, physical as well as virtual, coming up soon. So please keep joining. Thank you so much. Thank you, Manoj.
Thank you very much. Thank you all the regional council members, Saurabh bhai, Pradesh, my friend Murtuza bhai, to give me this opportunity. It's always really wonderful to interact with the fraternities. As part of service to the fraternity, we all should do. So thank you very much once again.
Yes, sir. We are expecting more sessions with you in future also. Thank you again.
Sure. Definitely we'll plan. Okay, thank you. I'll exit now. Thank you very much. Thank you everyone once again. You can contact me. The contact detail will be shared in the presentation.